want to share this story with you, which comes from Rachel Cole, who's one of our qualified property investment advisors out of our Sydney office. Now, I've themed this story simply as aggressive. We have an early 30s couple, no kids currently, very, very high income earners. So they are absolutely smoking it, getting on with earning a very, very high income. Now, they came to us with 5 existing properties before they wanted to build a plan with us. Now, the realisation when we reviewed those properties is that 3 of those properties weren't so great. They were what we would call underperforming assets, off the plan style assets. So some difficult decisions need to be made. Now, this couple are willing to just wait and see with those particular properties because of the income that they're currently generating. Now, big rocks in the jar, we're talking about a $2 million family home, of which they're going to buy and then potentially rent out, whilst they also may spend some time overseas as part of their career. So very career focused, and that's why they worked out that they are super time poor, and some of the investments that they were making, they were being misled because what you can find is the spruikers like to get into these channels of people who are high income earners and say, we can reduce your tax, we'll get you these properties, you won't have to worry about them. And when you're earning such high incomes, you know, the level of tax deductions that they can get are somewhat enticing. That said, if you don't get the capital growth, or if the value doesn't come in at purchase price, then ultimately losing money to save a little bit of tax is not very smart at all. We ultimately want our properties to be outperforming properties. We don't want them to be underperforming properties. So very much a focus on go hard, retire early, and we're in a position where we can look at how we plan out the owner occupied and how we look at the downturn in the market in Sydney at the moment to see where there's an opportunity to strike on that property. And that's the plan. Then there's 2 more investment properties after that in the next 7 years. And the overall result of that is we're looking at a retirement date of 2038, age 50. So shows what can happen. Obviously, when you've got very, very high incomes, there's a means by which you can accelerate your outcome, and a passive income, a very impressive passive income of $150,000 a year. So aggressive, but probably taking action without knowledge, in sort of getting maybe misled in regards to some of the advice they've had with the current portfolio that they've got. But we really want to sort of bed down some real quality assets, get that big rock in the jar in terms of that owner-occupied home. So for me, this is a story of focus, direction, goal setting. They're going to do that now. They're going to listen to Rachel in terms of how they execute, and they're going to go and shop to find those outperforming properties. And I have every confidence in this couple being able to build out their story and retire early as they'd hoped to, with some right professional advice this time around.